Mainstream media sentiment and coverage regarding crypto at the end of the last major bull run was rather comical. On January 11th, 2018, this man drew this line on national television.
It's trading at about 55 to 60 cents or so. I think you get another jump up there as more news starts to come out and more people start.
That's frightening stuff if you own crypto at that time. Today, we have people like Gene Simmons and other C-list celebrities jumping on the crypto train. This is also quite frightening. But there are a few things that are different in today's world compared to January of 2018. For example, this is the Minneapolis Federal Reserve Chairman telling the country that there is an infinite amount of cash in the Federal Reserve System.
Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
This is frightening stuff if you're concerned with the purchasing power of your fiat in the years to come. Lastly, we've been bombarded recently with major headlines regarding huge, century-old institutions investing in the crypto golden child, Bitcoin. So what does this all mean? Could institutions push crypto and Bitcoin further this time? And might the Federal Reserve drive more people to seek purchasing power refuge for their fiat? Let's take a look. Hey, what's up, everybody? Welcome back to the channel. Thanks for being here. Just a friendly reminder to please like and subscribe if you enjoy this video or find it helpful at all. And please leave any comments or questions or anything you'd like me to touch on in more detail in the comments below. So before we jump into this chart, which we're ultimately going to get to, let's just go back here for a second. And I showed this in the intro, which is one of my favorite little clips from the mainstream media, or the talking heads, as I like to call them. There's a screenshot of this actually on my phone that I repost in my friend group pretty regularly, just as a reminder to what we all endured, and a friendly reminder of what happens when the mainstream media starts to get involved with certain trading directions and stuff like that. It's quite funny, and it's pretty amazing that this guy's still probably very gainfully employed after drawing a line like that right at the beginning of like a year and a half bear market. But that's just how the world works, right? So this whole exercise here, and looking at these talking heads and this diagram that he's drawing and what they're explaining, is actually something that I like to call, or that's known as, the magazine cover indicator. I use the mainstream media and the magazine cover sort of interchangeably, as well as, like I showed you, the Gene Simmons tweet. Like, that kind of stuff all sort of, to me, gets bundled into this magazine cover indicator. And you could look this up. It's pretty well known. But it basically says that once major magazines or mainstream media start to get involved with the trading direction of really anything, it's known as a contrary indicator, meaning it's going to do the opposite of what they say it's going to do. And the reason for that is because by the time that it gets to the mainstream media, the thesis and the mechanism of what's actually happening has already run its course, and everyone's already involved, and it's sort of, by that time that they're reporting on it or comfortable to report on it, it's already dead. Which is really an interesting thing, and it's really interesting to read about. One of the more famous ones here is the Death of Equities Business Week article that was sort of the beginning of effectively a 20-year bull market, which is just hysterical. So we have, in 2017, 2018, we had this going on. Well, I should say in January of 2018, this is when this started. So you see, there was a few weeks of it coming off the peaks. And I mean, if we look at Stellar today, it hasn't even recovered to its previous all-time highs. Not that I'm a fan of Stellar at all, but just to make note of that. But it's very funny that he drew that line. All right. Anyway, I'm not going to harp on it. So we're looking at Gene Simmons here now. This is of what's happening today. And like I said, I kind of treat this the same as the mainstream media. This is a huge red flag for me. I mean, I don't like this at all. I've seen something with Lindsay Lohan and a few other people, and that stuff is really not promising for me as in terms of the direction that I think a market is going to go. However, I'm not entirely convinced that this is the turning point here, because as you know, like I mentioned, we're now in a time period where stuff like this is happening, where the Federal Reserve Chairman is actually saying there's an infinite amount of cash in the Federal Reserve. They just printed X amount of trillions of dollars, and it's quite frightening to a lot of people. And these sort of things are not going unnoticed by institutions, by insurance companies, by all of these large institutional players that are now starting to get into the space. I mean, we've seen headlines from, of course, we've seen recently Tesla, we've seen PayPal, Square. I mean, the list goes on and on of the amount of activity and involvement from institutions adopting this sort of space, this crypto space. So even though we do have the same sort of magazine indicator effect taking place right now, this sort of institutional adoption backdrop was not taking place in 2017 to the beginning of 2018. It just wasn't existent. It was mostly driven by retail investors, people who just hopped on for the ride. And by the time the media started reporting on it, of course, the hype was gone, everything was done, and it just went down for a year and a half or 2 years until we started moving back up. Now, keep in mind, this is all just my personal opinion. None of this is investment advice or anything. But the way I look at this stuff is I do believe that cryptocurrency is going to be a huge asset class in the future, just as if any other fixed income or equity asset class is. I think it's just incredibly early still. So there's a lot of very harsh ups and downs because there isn't any huge players yet. And if there are huge players, the huge players are typically people that are, if they're here already and they've been around, they're typically people that are just holding and accumulating at lower levels, which is sort of how I operate. I'm a big believer in that if you believe in something and you find stuff that you like, and you think it's going to be around in 5-10 years, and it's going to be effective and useful and successful, you hold it and you keep it. And you slowly accumulate in these dips, and you take advantage of the fear that's circulating in the market. But back to what I was saying, back here, it was a totally different time. There was no huge market players jumping into the space. There were very few major headlines of major money going into it. And now, I mean, we've seen, like I said, every week there's another institution, there's another giant brokerage firm making another branch to commit to cryptocurrency. And you have to realize that these people aren't doing this on a whim. Like, these people are having serious meetings, they're committing serious capital and time to growing these branches and hiring people, and they're committing to this as a business, as a new branch of their existing business. And once a few of them start doing it, for example, I know Morgan Stanley was the most recent one I've seen to expand it to their retail and private net worth clientele. I mean, once they do that, it's very difficult for Goldman and these other bulge bracket firms to not be able to just ignore that and not be able to compete in that space. Because if there's someone who is interested in Bitcoin, you need to even if the firm is not as up, even if the firm is not in motion on doing this, they're going to have to start doing it because they're going to lose customers. So it's just going to be a snowball effect. It is going to grow the adoption throughout high net worth individuals, throughout institutions. And of course, we've seen it as a reserve currency for a lot of companies, which I think it's basically, I think that the future of Bitcoin is going to be equivalent as like a digital gold. I don't think it'll be used as a cash system at all. It's actually rather poor to be used. It has extremely poor efficiency to be used as a cash system, but that's what we're seeing today. This institutional wave. These people are not going to jump into the space and be out in 5 months. These people have extremely long time horizons and are investing hundreds of millions of dollars in capital and human capital. So now, if we look at the chart, keeping that in mind, if we look back here, I drew some lines. I drew some, or I should say, these are arrows that I drew, this is the most common, not common, this is my favorite long-term, extremely long-term indicator that I use is the 21 EMA on a weekly chart. Really gives you a good idea of what the long-term momentum of a market looks like. And I put these little marks at each time in the last bull cycle that Bitcoin touched the 21 EMA. If we see here, since it broke past it over here, there was 1, 2, 3, and 4 touches on the 21 EMA, which is rather normal on the weekly chart. We look here, it was 18 bars or 126 days from when it last touched to when it touched again after it peaked for the year. Now, if we compare that 18 bars or 126 days for that market, if we come over here and we look at the bull market we're in right now, since we broke it, this was, what is this, March, May? So since we came above it over here, since we broke through it right here, I'm not counting that as a touch, although some people might. We've seen 2, maybe 3, if you count somewhere over here as a touch. We've had, I'm going to say 2. We had 2 touches to the 21 EMA, and the bar here, as of right now, obviously it hasn't returned to the 21 EMA. From this line here, has been 26 bars. So the previous one was 18 weeks. This one currently still open is 26 bars. So I don't think there's any question that this market is overextended. However, we have to keep in mind that there are new institutional players here, and there is a lot more people interested in it that aren't institutions because they're seeing it all over the news. And people are really starting to understand it as opposed to just jumping on because the price is going up. And of course, the whole backdrop of printing trillions and trillions of dollars and injecting it directly into the money supply is also keeping this extended from the 21 EMA. And the real question is, what impact and how long will that impact have a lasting effect here and keep it so extended above the 21 EMA? At some point, it is going to have to touch. Even when it does touch, in my personal opinion, I don't think that it's going to, the next time it touches, I don't think it's going to drop down and that'll be the end of this run. I think this run is going to extend just because of the impact that these institutions and this new money is going to have with this space. So I think that this gives us a little bit of an idea, a little bit of a little bit of a comparison to last time. Of course, we still have that magazine indicator effect taking place, the magazine cover indicator, which is a bad sign for the times right now. And there's no question that we are overextended as from a technical perspective. But I think the backdrop of the institutional adoption and the printing from the Federal Reserve is so strong that it's going to keep us overextended. And I do think we'll have to return here at some point, but I don't think that'll be the turn here. But of course, anything could happen in these markets. There's no telling at what point we're going to make it down here. If we make another run up towards 70 before we start heading back down, or there's no telling. But I hope this was helpful, and I hope this puts it into a little bit of context. I will touch on one thing, though. Since we were talking about the magazine cover, I'll leave this. This will be the end. We were talking about the magazine cover indicator. I don't know if you guys are aware, but a few weeks ago, the Times, they're known for these 3-word covers. I think this one was in 1967, this one in 2017, and this most recent one a few weeks ago is fiat dead. Now, according to what we just talked about, we would interpret that as fiat is not dead, which is contrary to what we're saying. But there is a little bit of an interesting story on what's happened after each of these covers were printed with in terms of God, truth, and fiat. Well, in terms of God and truth, because we've seen what's happened. So maybe I'll leave that for another video, but I'll just leave you guys with that. I hope you enjoyed this video. I hope you found it helpful. Any questions, please let me know. If there's anything I'm missing that you think I should take a look at, please let me know. And please like, comment, and subscribe. That's helpful.